So I want to start this. We're going to be doing some back testing, but I want to start this analysis on something I'm like super confused about, okay? And I want to show you guys. Here, give me 1 second here. I'm going to mark, and you guys will see what I'm talking about here in a second. Okay. So look. This is the end of the day. Okay, so this is the start of Monday at 0, 0. All the way to Tuesday. So this is Monday to Tuesday's range. Right? So what's confusing here? What is confusing me? What's confusing me is this. 8:30. Okay, everything good. We go to noon, 12, we're in lunch. 12 to 1800 on Monday. So we're going to look at this, and he says today's session is abbreviated and ends at lunchtime and reopens normal time. Today's session is abbreviated. I have no idea what that means. And then we'll go over this later on, but I need to learn what this means. I don't know why we have that, but either way, I guess we're not gonna pay attention after lunch. I don't know what the difference is. I wasn't even looking at this. I have no idea. I have no idea. Okay. Well, anyways, we're gonna go to the 1 day first before we continue on that, okay? So the very first thing here. Alright, we have a opposing candle. Now before I change my bias, I also just want to make something clear. Okay. So let's use the fib. Let's go from this low to the high. Okay, so right now we are above equilibrium. We're in a premium. Okay, these last 5 days, or 6 days, 1, 2, 3, 4, 5, 6, we have seen moves with no order blocks in between, no resistance, or if you want to say resistance, we've seen nothing like that. We saw this buy side liquidity taken, and I'm not now, because of one, bearish candle, I'm not expecting price to just go the other direction, but I do want to point out that on the week we have to ask ourselves, okay, on the week, where is price likely to go? Well, we look here, there's liquidity above these weekly candles, right? So let's look here. This fair value gap was rebalanced, okay, but overall we have seen lower and lower prices. We've seen very bullish or bearish prices. Sorry, bearish prices. So, with that said, I'm going to regard this day because it was short. I'm going to try to eventually understand why today it was as short as it was. So I am very confused, to be honest, you guys. But let's look at the 1 hour. Okay. I'll get those indicators back on. So we have open. Okay. So opening price here. Price trades below that. Okay. Displaces lower. Trades back up. Okay. Trades near open price. Okay. And then we see price move lower. We're going to go into the 15-minute chart now. So we're still in this fair value gap. We have these relative equal highs here. So there is still liquidity above here. Now, I'm not going to be looking at what happened after this because 1800, boom. Okay, this is not in a session that we would trade. However, what we will do, start by marking price from the open. Okay, where is the thing? Okay. And it looks like opening price was a bullish candle. Okay, so now that we have our opening price indicated, let's pay attention to this move lower. We have relative equal lows here that are violated. Okay, so let's mark these relative equal lows. The point of interest. Oh yeah, and for this I want to do the dotted. I think it's easier to pay attention. But we have these relative equal lows that were violated here. Okay. Now if we look at the high, which was the open, to the low of the day. Okay. We have this, which was an optimal trade entry. Okay. This was an optimal trade entry between 0.62 and 0.79. Okay. And we have displacement below equilibrium. Let's go ahead and just mark equilibrium here. Now thankfully, even though I'm a little confused, thankfully, give me 1 second. Sorry for me to multitask. Okay. So we have today's high, which is the open at midnight to the low, and we have equilibrium in between. We see displacement lower. We see these relative equal lows here violated. Okay. Price trades below into a discount below equilibrium, and we eventually see it trade into a premium above. These relative equal lows are also relative equal highs. So liquidity above these. So draw that in time. And funny enough, here, let's just draw it to here. It does that at the open of the New York session. Okay? But we have equilibrium marked before the New York session from the current high to that low. Okay? Let's drop into the 5-minute and get a closer eye on what's happening. Okay. So with that marked, okay, we can now look. So we have the 8:30 open. We have these relative equal highs here as well. In other words, we have a level of buy side that's violated. It's relative equal highs get taken out. Okay. Boom. It's taken out. And then price trades lower. But we are in a premium. So price does trade below this prior low. That's not exactly what I'm looking for. Okay. So after that, these relative equal lows are also a level of sell side, which which is violated multiple times. Just mark that. So we get these levels of sell side. We have this level of buy side violated. Okay, we have price displaced and a premium higher, and then we have these relative equal lows. Okay, taken. Price then trades back into the displacement or fair value gap here before trading lower, and this all happens in a premium. This all happens in a premium market. So we could look at our counter trend ideas, but I don't have full confidence in that yet, to be honest. I don't have full confidence in trading against the move, and I guess that's something that will come with time. But if we're looking at like liquidity being taken, we have these relative equal highs taken here on the buy side. Okay, price trades back up to fill the rebalance but fails to take out those prior highs. Okay, but it created a low on that displacement lower. It takes the sell side below those relative equal lows. Okay, takes that sell side and continues lower. Okay, it continues lower. So from this high here is created to this low, we can see above equilibrium, okay, at this fair value gap here, price trades into it above equilibrium before proceeding lower and trading below that prior low. Now, that's really everything that I can see here. Apart from this fair value gap, which was traded into afterwards, right? I mean, hold on. Let's get a rectangle here. Okay. Have this fair value gap, but that's not even... I wouldn't have... Like, this is so weird to me. How does it... I don't understand this. I'm gonna have to find a way to understand it. But I just don't understand this today, you guys. WEF annual meetings. Okay. I don't know what this means, what this does. I'm confused. And before I go to ICT's Twitter and look at that, let's look at this more refined. Okay. Same thing. Only thing is I would only be personally looking at this before lunch. If this range was created from the high to low of the New York AM session, okay, price trades into or above equilibrium, which also happens to be in that displacement lower, trading below a prior low, trades back up into it, okay, gives us that entry above equilibrium before continuing lower. That's the biggest thing I want to point out today. Okay. And then we have it trade up later, but I'm not even focused on this. I'm still very confused though. It's probably so boring, but if anyone's watching this, I don't care if you think this is boring. Okay, it's deepening my understanding by explaining this and putting a video out there where it's out loud, as if I'm teaching someone. I'm teaching myself through that. So we have him say that. Morning, folks. Today's session is abbreviated and ends at lunchtime and reopens at normal time. Okay, I don't know what that means. He says, note how ES. Oh, he's talking about the S&P. I forgot the abbreviation for it. Okay, what is he looking at here? Yeah, this is the S&P. And so on S&P it would have been this fair value gap, or this is what he's marking here on the S&P. Of course it reacts a little bit different. You see a weaker price here, at least compared to what this looks like on, well, that's on the 5 minute, so actually I'm wrong. But he says when I am not taking a trade and want to measure order flow, I look for things I want to see if I was short or long. I am neutral at the present moment, but monitoring this, studying it above the fair value gap negates bearish interest, helps me determine sentient. Here's this video here. Forget you guys can't hear this. But he was talking about how he doesn't have a bias because of Friday's key levels that were taken out. Conflicting analysis is a cause for neutral bias. Wait for more insight from price. This is a skill set every consistent trader has to know when to spectate versus speculate. Avoid the temptation to be in every minor fluctuation. Seeing what might be a setup and knowing by experience is probably prone to fail. Is a testimony of time in the charts. Neutral is winning bias. There is no drawdown, and insight is produced. Now I am monitoring the S&P. If it wants to expand higher, off the fair value gap I annotated earlier. Nothing excited so far. Typical of a holiday shortened session. Small move, but predictable, right? Short last night. I don't know. He retweeted this. I don't know if these lines are. I'm confused on what I'm looking at here. But you see? Just that a trader was able to withdraw 1 mil. Okay. So overall, what I'm getting for this, one of the things, what did I just talk about? I talked about how on the one day, I was a little confused, and here's what I need to take from this. Here's what needs the takeaway needs to be, okay? Look. A second. Boom. So this is Friday's high, and it was taken out. After all this buy side liquidity, okay, we had Friday's high and we had this lower. This trade lower today, or that's how price ended up being. But we wouldn't have known that. We could only known that with the benefit of hindsight. Either way, ICT himself was unsure, and I am confused on where price is likely to go. So I should be a speculator. I should be neutral. That's what I should take from this, okay? I don't really have an idea. I have an idea of, price trading above equilibrium through this range from the open of New York AM session to the low in London, the low that was created in London, price above equilibrium. I have price that trades back up near the initial open, trades down above equilibrium for the New York AM range, trades down, trades up, creates a fair value gap. I already went through this, but that's just because I'm in an early stage of development where I'm just thinking I need to look for moves. I need to be really honest with myself here. I need to be really blunt. I need to be really self-aware. I'm just studying moves, and if I was studying a chart, I would probably have entered this instead of saying, oh, I'm unsure. Based on seeing all this, do it one last time. Based on seeing all this bullish movement, okay, with this level of buy side taken, okay, with this high that was taken, it's relative equal highs, right? I don't know where the next draw on liquidity really is. I need to be a speculator. I need to speculate. Or spectate, sorry. Just as he said here. Hold on. I want to see it one more time. I want to get this advice one more time. Seeing what might stop a setup and knowing by experience is probably prone to fail is a testimony of time in the charts. Neutral is winning bias. There is no drawdown, and insight is procured riskless. We're gonna come on. Oh. Okay. Conflicting analysis is a cause for neutral bias. Wait for more insight from price. This is what I wanted to highlight. This is a skill set every consistent trader has and knows when to spectate versus speculate. So I need to spectate, Spectate versus spectate. Avoid the temptation to be in every minor fluctuation. And for me, that would have been the temptation, to be honest. I said that before I even looked at the Twitter, and I wanted to have that learning opportunity. So let's close off on the hat. I'm very tired. I'm talking very monotone, but it's okay. I'm excited to look back at these videos eventually. And that's all. Bye, guys.